Does it sound okay? Anna says yes. Adinda says, hey Adinda, sound is okay. Excellent. Cool. GY is here, and Anna, Treban, Colin RJ, I think I know who that is. Hey Boyke, FX Deviant, Minaj of course is here. Welcome Minaj. Gold, Sukim, Winner, Saturn, Trying Trader, and Keller, MIQ. I like that one. I like MIQ. That's a good name. English, Alex, SLR, Soulman. What's happening, Soulman? And Mike. Welcome. Okay, if this sounds okay, I guess we'll get started, folks. So basically, I want to welcome everyone. Thank you for spending your time here with the Naked Forex webinar. As you know, today we're going to talk a little bit about money management, which I think is quite important. And I want to show you some things that hopefully get you thinking along those terms, and hopefully they will help you. I know that they have certainly helped me over the years. And then we can move to the charts afterwards. So probably spend the first half with the money management stuff and then go to the live charts if that's okay with everybody. Okay? All right, cool. So let me pull up my I want to pull up my image here. Hey, Tony made it in JR. Okay, cool. So I'm going to go ahead and do this spreadsheet right here. Okay. How many of you, does anyone here know what your win rate is? Does anyone have your win rate? You know what it is? No? Nobody knows what their win rate is? Okay. We can use my example then. Okay, cool. All right, so let's assume that I've got a trading system and I've been trading it for a while, or maybe even better, I've back tested it for a bit, and I see that my win rate is 61%. Yeah, right, and so my average winner is $125. Now, what does that tell me about my trading system? Am I making money here if I'm making $125 every time I take a trade? 39% of my trades are losers and 61% of my trades are winners. What does that mean? Yeah, Boyke, I figured you were joking, Boyke. What does that mean? Am I making money? Or what's happening with that? Anything at all? It actually won't tell me if I'm making money or not. And the reason why is because I have to incorporate my average loss. If you know your expectancy formula, and you can Google this, but if you know what your expectancy formula is, then you understand that this is what the key things that I need to know are: what's my average win, what's my average loss, and what's my win rate. That's going to tell me if I'm going to make money. I really need all of those pieces. So Gold is right. You need to know what your average winner is, what your average loser is, and what my win rate is. And if I know those three things, then I can know whether I'm going to probably make money. Now, what will happen over time, like if I have 100 trades, or if I have 500 trades, or if I have 1,000 trades, in the end, what's going to happen is I'm going to accentuate my edge, right? So it's going to hover around my win rate. My best guess, if I take any individual trade, is that 61 times out of 100 it's going to be a winner, and 39 times out of 100 it'll be a loser. You can see here, because my average win is $125 and my average loss is $200, after 1,000 trades, if I start with $10,000 risking 2% per trade, right? 2% per trade is $200 of 10,000. After 1,000 trades, I'm most likely going to end up negative. I'm going to be down. I'm going to be in the hole, right? So what that's telling me is that I am not going to make money over the long run, right? Even though I win more often than I lose. Does everyone see how that works? Because what I'm doing here is I'm having big losers and relatively small winners. In fact, what I could do is I could divide my average winner by my average loser to get sort of a reward to risk ratio. And that would end up being something about like 0.625 or something. So for every dollar I risk, I make 62.5 cents. It's going to end up being about that. Yeah. So for about every dollar I risk on this trading system, I'm expecting to make about 62.5 cents. But that's not really that critical. The important things are average win, average loss, and win rate. So if I'm doing any sort of back testing in Forex Tester, if I have my account statement from my broker, I should be able to pull off these three things: what my average winner size is, what my average loser size is, and what my win rate is. Okay? Right. Boyke says, yeah, looks RR is not good. Gold says you can have 10,000 lots, and as the banks trade 5 pips, you have 500,000 in just 5 minutes. Yeah, that's absolutely true. But if I'm trading this system here, it doesn't matter how many pips I'm going for. In the end, if I'm trading this system right here, I'm going to be a loser. And the longer I go, the more likely I am, in fact, to be a loser. You can see after 10,000 trades, I've lost $7,500, whereas after 100 trades, I'm expected to only lose, $175. So the longer I go trading this system, over 50,000 trades, I'm going to lose $77,500. And that's keeping with the same lot size, too. So there you go. All right, so let's talk about how I might adjust this. So what can I do, knowing that this is my system, to improve it? What can I do here? Is there anything I can possibly do? Is there anything that I can do to make this system better? Any ideas? I know that I win 61% of the time. I know that my average loser is 2% of my starting balance, or $200. And I know that when I have a winner, I make about $125. Solman says, hold your winners longer. Mike says, stop trading. I like that one. Colin says, reduce the loss to $100. Actually, I like the way you guys are going. This is really cool. Yeah. So there's actually Solman, Mike, and Colin are all right. Boyke says, trade naked. Everybody's right. So far, everything that you said is true. You have to let your winners run longer and cut your losses, says Anna. Well, let's go with what Solomon said, because he was first. Solomon said, hold your winners long. So in other words, let my winners grow. So what can I do in terms of that? Well, that would obviously up my average win rate, or my average winner. So instead of making $125 per trade, perhaps what happens is if I hold them longer, I end up with, $200 winners on average. Well, you can see what's going to happen here is I'm going to make money, aren't I? But since I'm holding my winners longer, perhaps my win rate suffers a little bit and I have a few more losers. Let's say that drops my win rate down to 55% from 61%. So I'm losing 6% more often, but because my winners are bigger, in fact, the same size as my losers, I'm starting to make money. After 100 trades, I've made 20%, right? And what happens after 500 trades? Well, I'm still making money. I've doubled my money. And after 50,000 trades, I've done quite well. Okay, great. So now my next question is, what about that was Solman's recommendation. Now, remember, we did have, in the beginning, we had $125 as our average winner. Now, what Colin said, he said, reduce the loss. So instead of holding my winners longer, what if I still had a 61% win rate, but my average loss was less? So what if I reduced my loss to $150 from $200? You can see that what Colin said would also work. because what's happening here is I'm still making smaller winners on average. They're still $125. I haven't changed that. But what I have done is I've taken my losers more quickly, and what that has done is that's actually upped my ending balance. So whereas before I was losing money, now I'm actually making money because I'm holding my I'm getting out of my losing trades faster. So Colin is actually right as well. So Solomon and Colin are both right. And if we look at what Anna says, what if we do both? Anna says you have to let your winners run longer and cut your losers. Well, yeah. So if we do what Colin says and we reduce our average loss, and what's one way to do that, folks? What can we do? Like if I want to risk 2% and I'm starting with $10,000, that's $200. But that doesn't mean I have to take a $200 loss every time. I don't have to wait for the market to go back and hit my stop loss. In fact, I can get out of a losing trade before it hits my stop loss if it looks really ugly, right? In fact, that's what I do in my practical trading is I'll have an emergency line in the sand stop loss. But if the market's not moving, if I'm trading the daily charts and it's been 6 trading days and it's not really going anywhere, I might just dump my trade for a small 20-pip loser instead of waiting for it to go 120 pips against me. And what's that going to do? It's going to reduce my average loss. So let's do what Anna says. Let's reduce our average loss, as Anna and Colin have suggested. We'll keep it at 150, and then we'll increase our average winner, as Solomon says. Now, because we're letting our winners go longer, we're actually going to lose more often, right? Not all of our trades are going to go as far as we expect them to. So I'm going to actually end up with a 55% win rate, let's say. But I'm still going to make money here. Even though I've reduced my win rate, because I've cut my losers more quickly, and on average, I'm not allowing them to go all the way to hit my 2% stop loss. I could even say that, my average loser is 1.7% of the starting balance, which would be $170. As long as I'm letting my winners run, even though my win rate's reduced, I still end up making money here. So basically, what we're talking about here is how the interplay of these 3 things work, right? My losers, my winners, and my win rate. Now, what's going to happen if I really hold on to my winners? Well, if I really hold on my winners and I look for, say, $300 per winner, well, obviously, my win rate's going to start to fall, isn't it? In fact, maybe it goes down to where, I'm losing 4.5 times or 45 times out of 100 winning 45 times out of 100 and losing 55 times out of 100. As long as I keep cutting my losers rather quickly and letting my trades really run, I'm still going to make money here. I've made 41.5% on my account after only 100 trades. What happens after 500 trades? Well, I've tripled my account. What happens after 50,000 trades, after a couple decades of trading? Well, I've done quite well. And again, this isn't anything really drastic because I still don't have a 2-to-1 reward to risk ratio, right? Because if I had a 2-to-1 reward to risk ratio, this would be $340. But it's not. It's $300. It's only $300 on my average winner. So what I'm doing here is I'm just letting these trades really run. So the point that I'm trying to make here is that, as you can see, it isn't just this idea of making sure that I have an exceptional reward to risk ratio. It's actually the interplay between all 3 of these aspects. One is, one way to make more money and to improve my money management is to cut my losers more quickly, right? That's one way to do it. That's one way to do it. So that's what Colin says. And then, as Solomon says, you can actually hold on to your winners longer, or as Anna said as well, you can hold on to your winners longer. That's another way to do it. And we have to remember here, when we do things like this, if we cut our losers more quickly, that's going to reduce the win rate because we'll have more losing trades if we're quicker to cut those trades that go against us. And if we really hold on to these trades and expect them to really go and go and go for us, that's also going to cut into the win rate. But in the end, what we see is that that's not that big of a deal for me as a trader because guess what? I'm still making money here. And in the beginning, I wasn't making money. Remember my original numbers here? $125 winners, $200 losers, and I had a 61% win rate. Well, guess what? That's a losing strategy. Over time, I'm going to lose money. So I just wanted to point out here that one way that we can really improve our trading is to take our losers more quickly. Another way is we can hold on to our winners, and doing both of those things is obviously even better. The interplay, though, between win rate and psychology is often overlooked. As traders, we often find it, at least the traders that I know, find it difficult to suffer through a low win rate. In other words, it's entirely possible for me to have average winner of $300, average loser of $170, or actually I could even wait even longer on my winners and have a $350 winners. And I could have a, let's say, 42% win rate. So I'm losing 58% of the time. But psychologically, it's often difficult for traders to sit through so many losing streaks, which are inevitable when you have such a low win rate, right? It's absolutely inevitable that I'm going to see myself having a lot of really bad losing streaks because I don't have that many winning traders or winning trades. So I just wanted to point this out. Now, what I'd like to do now is graphically show you this from a statistical point of view, just to sort of bring it home. Minaj says, surely if you had a high win-loss ratio, even if your win size in pips is small, you can afford to trade a larger percentage of your account per trade. Okay, so what Minaj is saying is that if you up your win rate, okay, so let's say we have a 71% win rate, right? Even if our pips is small, you can afford to trade a larger percentage of your account per trade. Now, Minaj, what you're getting into is kind of the idea of risk of ruin, which is essentially getting into losing streaks and the probabilities of losing streaks. So that's kind of where I think where you're going. If we can take it in that direction, but it's probably better to have a separate webinar on that. But what you're suggesting is correct, Minaj. I mean, I would agree with that. What you're saying is that if you have a high win-loss ratio, even if your win size in pips is small, you can afford to place a larger percentage of your account per trade. Yes, the pips doesn't really matter, obviously, as we all know. The number of pips we make on a trade is irrelevant. It comes down to the percentage of gain that we make, and that's related to lot size. So, for example, a scalper might look for 3 pips, but have a whole bunch of lots on that trade, and the stop loss may be, something like 7 pips. Whereas, so let's just do that. Let's say that a scalper here is making 3 pips, and we'll just say, for sake of argument, that's $300 on a winner. And let's say that the stop loss is 7 pips. So let's just say, for the sake of argument, that would be $700 losers and $300 winners. So you can see our scalper here is making 10% after 100 trades because the scalper has such a high win rate. It's kind of the idea that you're talking about, Minaj. But the issue when you start upping your percentage, so let's say that I'm going to go ahead and go with $600 per winner and $1,400 per loser. In other words, I'm doubling up my risk here. I'm going to make more money, but the lower this number here, this win rate, the more likely I am to blow up my account as I start to increase my bet size. And we can actually have a whole webinar just on that issue. But what you're suggesting is absolutely true, Minaj. See you, Colin. Take care. All right, so let me show you these charts that I want to get into now. They are right here. Okay. And boom. Okay. So you should see a curve on here. Can you see my, whoops. Can you see my bell curve on here? Does everyone see that? Should see that. Yes? No? Yes. Okay, cool. All right. So this is basically, I'm sure a lot of you are familiar with the bell curve, and that's basically what we have here. So I have in the middle of the chart this thick line, and that delineates the winners from the losers. So let's say that all my losing trades are on the left of the chart, right here, and all my winning trades are to the right of the chart. So you can see here that the middle point here is essentially, this is essentially going to be my win rate. So if my win rate is 50%, my curve is going to look something like this. And in practice, most of us probably don't have a 50% win rate, so our curves are going to be slightly different in the shape. But the general idea that we're talking about here is true. I mean, this is the general idea here is absolutely true, which is that we're looking at splitting up our trades between losers and winners. Now, some of our losers are going to be very painful. This is for those traders or those systems like that have no, like martingale or something, where you just keep taking trades over and over again and you never really, close them out. Like some of you are probably familiar with martingale, where, you buy, and if it doesn't go well, then you buy again, or you buy, and if it doesn't go well, then you sell, and then you buy, and then you sell, and you just keep doing things like that. You don't really close out losing trades. You just keep adding to your position or whatever. Well, here's the thing about statistics and what we know about our trades is that any given trade can land anywhere on this curve. Where are most of them going to fall? Most of them are going to fall in the green area here. And most of them are going to be small losers. Let's say that we're risking about 2%. So most of them are going to be small losers between negative 0.1% and 1.9%, right up to this little line right here. And then some of them are going to be small winners between plus 0.1% and plus 1.9% right here, or this line right here. So most of them are going to be in the middle of the curve. We're going to have a few trades that are hefty losers, which are negative 2% to negative 4.9% in this yellow area of the curve, and a few hefty winners as well, where we make 2% up to 4.9% in this yellow area of the curve. Now we have some really painful losers that just keep going and going, and we lose 5% or more on these. And likewise, for those trades that we really just allow to go and go and go for us, these are the big fat winners, where we see ourselves actually making 5% or even more, because we're holding on to these trades as they run and run and run in our direction. So now let me ask you this. How can we improve on this? Because what's happening right here is I'm just allowing the market to dictate what happens on any given trade. I know that most of them are going to line up in this green area, so they're going to be small winners or small losers. But what I really want to do is make money here, right? That's the name of the game. So what can I do to change this curve? Any ideas? What on earth can I do to make this better? I'll show you. What I can do is this. Can you see my new one here? You should be able to see it. Yeah, so Anna's saying, why don't you have a tight stop? MIQ says that he can see it. Okay, great. So what I can do here is I can cut out my most painful losers and cut out my hefty losers, and then I can use a stop loss. So what I'm going to do is I'm actually going to do what? I'm going to lock in my losers so that all of my losers end up being small, and they fall in this category here between about 2% or less, right? Remember, as we said before, we don't have to wait for the market to hit our stop loss. In fact, what I can do is get out of losing trades a little bit earlier than allowing them to hit my stop loss. So that means that not all my losers are going to be 2% losers. They might be between 0.1 and negative 1.9 if I'm able to get out of all of them before my stop loss is hit. Now, practically speaking, some of them are going to hit the full 2%. But the point here is that I can cut off this whole edge of the curve by using a stop loss. And then what I can do here is I can have all of these green trades here. So some of them are going to be big fat winners, some of them are going to be hefty winners, and some of them are going to be little small winners. So what I've done here is I've eliminated a whole giant section of the curve, which is very important to me. Yeah, that's very, very important to me. So you see how that works, right, Anna? Obviously, you do. You're totally with it. You're stacking the odds in your favor. FX Steven, you got it. So what I'm coming up with is this. This is what I get. I get a chart that looks like this. So I have a few losers that are going to max be 2%, but I'll get out of them earlier if they start creeping down towards my maximum 2% loss. And then what I do here is I let some of my winners run, so they're big fat winners. Here, you should be able to see it now. Hold on. You should see it now, folks, yeah? Boyke? Yeah, okay. Okay, so what's happening here is I'm cutting off my losers right here as they go against me. In fact, I'm dumping some of them rather quickly before they even hit my stop, and then I'm allowing some of my winners to really run. I know that a majority of my winners are going to be between 0.1% and 5%, but a few of them are going to go more than 5%, and that's going to make all the difference in the world for me. So that's really what I'm trying to do here. Now, Manoj has a very important question, which is, will you not reduce the number of big fat winners? Some will have gone against you initially, and now you are being stopped out. So what Manoj is saying is that why do this? Because some of your trades are going to move against you and go, down over here, and perhaps, draw down negative 4.8%, and then end up on the other end of the curve over here and be big fat winners. That is a possibility. It's always possible for the market to go one way and then whipsaw the other. But what I would rather do is I would rather have the peace of mind knowing that I'm never going to take a loser more than 2% and reduce my win rate, because as most traders, this is what most traders do. Most traders, when they get into a trade, they're expecting that trade to go almost immediately. It's very rare for a trader to get into a position and expect a significant drawdown. Most of the time, most traders are going to look at a position and go, you know what, it's going to go now, I got to get in now, right? And so especially if like you were looking at a higher time frame and then you drop down to a lower time frame to get a good, entry or something like that. If you're using a system like that, if you're using any kind of system based on momentum, then you're probably thinking, you know what, this trade's going to go, so I'm going to get into it right now. So most traders don't have the patience to wait through a massive drawdown. And I would rather miss out on those big winners that go against me, negative 5%, and then finally go, because it's worth the peace of mind, I guess, is what I'm saying, right, in the long run. Solomon says the market is not a level playing field. It's skewed against the retail traders. At the end, you will lose all your money no matter what you do. Okay, that's certainly one person's opinion. I disagree, but okay. I would say if we believe something and we hold it to be true, it will definitely show up. That would be my belief. Is that if we're all going to lose money in the long run, then why trade? So, but I would say this: if you expect to lose money in the long run, you're almost certain to do so. That I would definitely agree with. If in the same way that if a parent expects their child to be a drug dealer, then the child is almost certainly going to become a drug dealer. I mean, those sorts of things, those expectations can really drive our experiences. But that's a whole nother discussion. Yeah. So there you go. Okay, so everyone sees the advantage here of cutting our losers and letting our winners run, or at the very least, making sure that we don't have the most painful losers or the hefty losers here, right? And there are going to be times where we get flipped or there's a gap or something like that, and it might go a little bit beyond where our line in the sand is here, and that's certainly a possibility. But overall, what we're trying to do here is do our best to eliminate the most painful losers and the hefty losers right here. Okay, so let's get into the charts here. So I'm going to pull up the live charts. Are there any charts that anyone would like to look at the moment? Any naked traders here looking at anything in particular? Because I'd love to take a look at some of the live charts. GY says Warren Buffett's mother was a mental alcoholic, and he became the richest. Yeah, history is rife with people who had very difficult childhoods and they overcame it. And that's because they were determined to do so. And they expected to do so. Absolutely. Gold says Solomon is partly right because brokers are legalized crooks at mafia and cartels, like it or not. Okay. Look, I mean, I'm not going to argue with anyone's personal beliefs here. If you believe that you're going to lose money trading, then I would definitely recommend finding some other thing to do. Just like if you believe that nobody can become, a professional skateboarder, then definitely don't try and become a professional skateboarder. You know what I mean? Same sort of thing. Same sort of thing. Pinto says, I have a problem with the news. Most of the times when some news comes out, it goes to where my stop is and then moves in my direction. How do you deal with that? Well, Pinto, I can only tell you how I trade, and I generally trade with the 4-hour or the daily chart. So, for example, let's see if we can find. Actually, the only trades right now are weekly for me. So I'll go to a weekly chart and show you. Let's see here. Okay. Does everyone see the New Zealand Singapore here? So this is how I trade, Pinto. I've got a weekly kangaroo tail here. Now, if you don't know what the kangaroo tail trade is, you can email me. I'll send you the book. But most of you, I think, do have the ebook on kangaroo tails. It's walter@fxjake.com. That's my email. And here's what a kangaroo tail looks like. We've got an open and a close in the top third of the candle. The open and the close on this candle right here, this blue candle, are inside the previous candle's range. What I mean by range is between the high and the low. And it's on a significant support and resistance area, which is only an area where price has recently reversed. So you can see price reversed here, it reversed there, it reversed here, and it reversed there. So that's why this 99.50 level is a pretty critical area. So what I'm looking for as a naked trader is I'm looking for price to move to a significant support and resistance zone, which is simply a place on the chart where it's reversed in the past. In other words, it's come down and bounced off this level and traded higher, and it's gone up and hit this level and then traded lower. So you can see where it found resistance here and then fell, and it found support here and then went up. Found support here, it went up. Found support here, it went up. It broke through, came back up, paused, then it found support, and then it moved up. Came down here, it paused, and then it broke through. Came back up, it paused, it broke through, bounced, and now you can see on the weekly New Zealand Singapore dollar, it looks like I have another situation where this currency pair has found support here. So if it trades at $1.50, which it actually hasn't done that yet, between now and the end of the week, I will buy this pair I will put my stop loss at 98.70, and I will take profit first at 101.78. I'll move my stop loss to break even at that stage, and then shoot for $103.70. So that's kind of how I manage my trade. I'm not interested in a 5-minute chart where my stop loss is 15 pips away, and the market immediately, stops me out when Ben Bernanke sneezes or whatever. You know what I mean? So that's not interesting to me. To me, it's much more interesting to look for these weekly and daily chart trades because, I'm not it's difficult for a broker to spike me, for 180 pips. You know what I mean? Whereas the brokers can give you little jiggles, with 3 to 5 pips here and there. So, as a person who trades higher time frames like 4-hour charts and daily charts and 1-hour charts and weekly charts, those sorts of things are unlikely to happen. Could you please take a look at the Aussie? FX Deviant says he lives in New Zealand and he never looked at the New Zealand Singapore. Well, the Singapore dollar is really cool because the hedge funds or so many hedge funds in Singapore, they love trading this sucker. So any of the Singapore pairs are really cool for technical analysis, like the dollar Singapore, the New Zealand Singapore, the Singapore yen. They're all awesome. So let's look at the Aussie. Where is the Aussie here? Here we go. Here you go. You should see it right now. So this is the Aussie dollar here. And I'd say it's going to make a move up to 104.30 or so, which is basically where it found support here, support there, and resistance there. Yep. Yep. So does that make sense? Yeah. So in this case, I would be looking for a possible sell trade on the Aussie if it reaches right around here and prints a bearish candle. That would be what I would be doing for this pair on the daily chart. But this is this is a weekly chart I've got on here. Any other? What Mish says, the previous tailed candle is excluded due to low reward to risk as resistance quite close. Which chart were you talking about, Mish? Was that the New Zealand Singapore? Is that the one? Yes, Kiwi. You're talking about this candle right here, yeah, Mish? This one? Well, the problem, a kangaroo tail must have an open and a close in the top third of the candle. So do you see this? The open is not in the top third of the candle, so therefore this candle right here is not a kangaroo tail. Yeah? Yeah. So this one right here does not qualify as a kangaroo tail. You can see, I'll zoom in so you can see it better. But see this yellow line right here? That's the 33% level. I've actually adjusted my fib grid so it goes to 33%. And so it's got 33% and 10% here. So obviously this is not a kangaroo tail because it just missed it, right? Yeah, so it didn't qualify as a kangaroo tail. Exactly. Now, contrast that to this one over here. This one over here but there's other problems with this one. There's other issues with this candle right here. But you can see that this candle does qualify as a kangaroo tail because the open and the close in the bottom third. However, there are other problems with it, like it doesn't stick out from recent price action. There's a lot of consolidation immediately before it, all those sorts of things. So it's not really an ideal kangaroo tail, but as far as the open and the close, it does it does qualify. It's in the top third. Boyke says, is it true that we become what we think? Yeah, I think so, Boyke. Try it out sometime and see if it changes you. Try it out. GY says, I think the worst trader is IG Index if you're in the UK. They definitely trade against clients. GY, all your brokers will trade against you. All of them will. So that's just how it works. Walter, on your long-term trade, do you find sometimes that the spread widens massively during certain Asian hours? Absolutely, especially during the early Asian session, say like today, you know? Yep. Kiwi is still up, says Boyd. Dolman says, I bought a lottery ticket every week, and when I know my chance of winning is 15 million to 1. GY wants to look at the euro. Okay, let's do that before we quit here, folks. All right. Okay, the euro is clear to me. It's exceptionally clear where the euro is going. To me, it's a no-brainer. It's going to go right here to 1.3050. The reason why, in my opinion, as a naked trader, why it is where it is right now is that we've seen the market pause here before. So right here, see these, when the market moved down, it came up and did this little jig right here. It came close here, but it wasn't quite where we were here because that's exactly where we are right now. In other words, we're at a minor support and resistance zone where the market paused here on the way down, came back up and touched it and fell. This is the 28.15 level. Today's high is 28.11 so far. So to me, that's where we are. Now, notice back here also, all of these candles couldn't get through this level as well. This is back in December, January, where the market couldn't get through there. So in my opinion, we are clearly headed to 1.30, well, at the very least, these candle lows here. So 1.30, which is another 200 pips from where we're at right now. Yeah, 220 pips. So if I had to guess where the euro is going to go, I would say it's going that way. How might I trade this if I'm not in a trade right now? Well, one thing that I could definitely do is wait for the market on the 4-hour chart to break above 28.15, trade up here, and then perhaps tomorrow or the next day it'll drift down here and give a nice bullish candle off of 28.15. In other words, it'll trade above 28.15 and then it'll come back down, retrace, and bounce off 28.15. That would be a great place for me to get into a trade. Manoj, have you heard of anyone who is successful trading shorter time frames? Yeah. It's just easier to trade higher time frames, Manoj, because one, you pay less commissions. Two, you can have a job and still do it. Three, it's much more relaxing. It doesn't act, when you trade lower time frames, it actually activates a different part of your brain. It's a totally different thing. It's completely different. It's like the difference between jumping out of the plane in a squirrel suit and, riding a Ferris wheel. You know what I mean? Like there's no comparison. Trading the daily chart and trading the 5-minute chart or the 1-minute chart is a completely different thing, So that's why. The euro yen will be the last chart we look at, folks. Let's take a look at the euro yen. Okay, so here's the euro yen, and this is the chart that Pinto wanted to look at. Now, let me just back it up. I know I've got the weekly chart on here, so I don't have all my daily support and resistance zones drawn. But clearly I've got one here where we had this kangaroo tail back here. And then it looks like I've got one around this area as well. And that would be my place to look for. I would look for it to go to 101.40 or just slightly below, like 101.30. You can see it bounced back here. It touched it here and fell, got back up there. It looks like this is a pretty good target, 101.30. If I had to guess, I'd say this pair is going to make a run to 101.30. But again, right now, it wouldn't be I don't have any clear buy signals. I just see that it's on a tear and it's likely to hit 101.30. What's your stop for trading in the daily chart, says GY? It depends on the formation. We can definitely talk about that next time when we go over specific price pattern. But if you have the King Retail ebook, then you know where I put my stops. It's pretty easy, right? And if you don't have the King Retail ebook, you can always just email me at walter@fxjakes.com and I'll send that through. Gold says a friend of mine trades only 5-minute charts and making 100 pips a day. Best scalper I knew. That's absolutely possible. I'm not saying it's not possible. I'm just saying that for most people, you know, if you've got a job and you spend 8 hours a day at work, it's going to be a lot easier, isn't it, if you trade the daily charts or the weekly charts? Even the 4-hour charts are doable for someone who spends 10 hours a day away from, you know, your trading desk. Yeah. I'm happy for your friend, Gold. That sounds good. A lot of those guys burn out, though, obviously. Yeah, Solomon says the euro is frozen, waiting the Germany court's decision. Yeah. MIQ prefers long-term. Thanks so much for spending time here today, guys. I really appreciate it. I hope you have a wonderful week of trading. Thanks so much, Han. Han is here. Hey, Han. I didn't see you until just now. Thanks, guys. See you, Soul Man. See you, Minaj. Take care, Han. See you, MIQ. See you, Saturn. See you, Keller. Bye, J Trader. See you, Gold. See you, Han. Bye, Saturn. Bye, A1X. And Tribans. See you, Mike. Bye, Tony. Take care. Have a wonderful week, guys. We'll talk to you soon. See you next week on Wednesday. Okay, bye.